Our story begins in 1913 with the creation of the Federal Reserve, but not because of what most people think. The Fed wasn't created to protect the public. It wasn't created to prevent collapses. It wasn't created to stabilize prices. It was created to control the supply of money. And the moment you control the supply, you control everything built on top of it. The core tool, issuing money as debt. Instead of governments creating money directly, they began borrowing it from the system that elites quietly owned and operated. And every dollar borrowed came with interest. This was the spark that lit the monetary cycle. A cycle built on three pillars. Create money from nothing, lend it at interest. The world changed forever in 1971. When President Richard Nixon ended the gold standard, money officially detached from any physical backing. No gold, no silver, no tangible asset, just belief and debt. For the first time in human history, governments could create money unlimitedly. Banks could multiply it. Corporations could leverage it. And the public, well, the public could only react to it. From that moment forward, the covert monetary cycle began accelerating at a pace never seen before. Debt exploded, inflation became permanent. Savings lost value every year. Assets owned mostly by the elite skyrocketed in price. Cause and effect became painfully clear. The more money that was printed, the more value existing money lost. The harder it became for normal people to save. The easier it became for the wealthy to borrow, invest, and expand their wealth. And this wasn't an accident. It was baked into the structure. The cycle was working exactly as designed. Every monetary cycle eventually reaches a moment where the expansion becomes impossible to maintain. Too much debt, too much currency, too much leverage. And then something snaps. Look back at the last century. The Great Depression, the 1970s stagflation crisis, the dot-com crash, the 2008 financial meltdown, the 2022 global inflation shock. Different eras, different triggers, same pattern. The cycle always collapses under its own weight. But here's the hidden mechanism nobody talks about. Crashes aren't bugs, they're resets. Resets that allow the elite to buy assets for pennies, while the public loses homes, jobs, savings, and security. Every breaking point becomes an opportunity for the top 1%. Every disaster becomes a transfer of wealth. This is the core function of the cycle. When the cycle resets, ordinary people feel the pain first. Savings lose value. Prices rise, jobs vanish, debt becomes crushing. Governments increase taxes. Banks tighten control. Meanwhile, those at the top, who own corporations, stocks, real estate, commodities, and political influence, walk away with even more power than before. After the 2008 crisis, for example, the top 0.1% gained trillions. Homeownership among the middle class fell. Banks were rescued while families drowned. The wealth gap hit levels not seen since the 1920s. And after the 2020 crisis, billionaires' wealth surged by over 60%. Inflation quietly stole years of income from middle-class families. Governments increased debt at the fastest pace in modern history. The fallout is predictable. The results are consistent. The winners are every time the system breaks. Governments promise reforms. We'll regulate the banks. We'll control inflation. We'll lower interest rates. We'll protect the public. And every time, nothing changes. Because the cycle isn't broken, it's functioning. The fixes are temporary bandages on a machine designed to repeat the same behavior, expand money, inflate prices, increase debt, reset through crisis, transfer wealth upward. Real reform would require dismantling the very system that those in power depend on. So instead, the cycle continues. the modern monetary cycle began in 1913, with the creation of the US Federal Reserve. This moment is more important than most people realize. Before this, money was tied to physical value, usually gold or silver. Governments couldn't just create more. Banks had limited power to expand credit. But with central banking came something new. Elastic money. Money could stretch, expand, inflate, and when necessary, it could shrink. This meant governments could borrow more. Banks could lend more. Economies could grow faster than ever. But there was a catch. When money becomes flexible. As the 20th century progressed, a new idea took over. Debt fuels growth. Governments borrowed. Businesses borrowed. People borrowed. Banks loved it because every new loan is new money. Governments loved it because debt buys productivity and political time. Corporations loved it because leverage means expansion. But for every boom, a bust must follow. And here's where the cycle gets covert. During expansions, money flows freely. Asset prices rise. The wealthy invest first. Everyone feels richer. But when the correction comes, and it always comes, the pain isn't shared equally. The wealthy have liquidity. They buy assets at the bottom. They gain even more power during the rebound. Meanwhile, the most important moment in modern financial history happened in 1971. President Richard Nixon ended the gold standard. Overnight, money became purely symbolic, a promise backed only by government trust. And with that one decision, debt exploded. Inflation became permanent. Banks gained extraordinary power. Governments could print without limit. Wealth gaps began to widen at historic levels. From 1971 onward, the covert monetary cycle became unstoppable. Because when money is unlimited, control becomes the real currency. Let's be clear. People aren't getting poorer because they're lazy. They're getting poorer because the system quietly extracts value from them. Here's how the draining works. 1. Inflation steals savings. When money expands, prices rise faster than wages. Your past labor loses value. 2. Debt traps grow easy. Loans pull the middle class into lifelong repayment cycles. 3. Assets become unaffordable. Those who own assets get richer. Those who don't fall behind. 4. Crises wipe out the bottom. First, recessions transfer assets from the desperate to the wealthy. 5. Bailouts protect the top. Governments save corporations, not citizens. This is not accidental, it's structural. To understand the modern financial world, you must travel back to a time when money was real, when it meant gold, silver, and physical value. But at the start of the 20th century, powerful bankers and political figures wanted something else, a system where they could control money, not by mining it, not by earning it, but by creating it. And in 1913, with the founding of the US Federal Reserve, the foundation was laid. For the first time, the power to expand or contract money didn't belong to the people. It belonged to a central authority. This wasn't just a change in banks. It was a change in civilization. Now, money could be issued as debt, expanded at will, manipulated through interest rates adjusted in secret meetings. This gave birth to the first phase of the hidden cycle, controlled expansion. Whenever the economy needed stimulus, more money was created. Whenever inflation rose, money tightened. But no matter which direction the cycle moved, one group always benefited. The elite. The lenders, the institutions closest to the money printer. Everyone else felt the delayed effects: rising prices, shrinking salaries, and disappearing savings. As decades passed, the world grew addicted to a powerful idea: debt equals growth. Governments borrowed, corporations borrowed, families borrowed. But here's the hidden truth. Every dollar in existence came into the world as debt. If nobody borrowed, there would be no money. So the cycle tightened its grip. because debt required interest, and interest required continuous expansion. This led to booming stock markets, rapid industrialization, massive consumer culture, the illusion of prosperity. But beneath the surface, something else was happening. The wealthy who had access to credit first invested in assets. Those assets. In 1971, the entire global economy transformed overnight. President Richard Nixon removed the US dollar from the gold standard. For the first time in human history, money had no physical backing. It became unlimited, intangible, manipulable, debt-driven, controlled by policy. This was the beginning of fiat currency, money backed by nothing but government decree. And here's the shocking part. Since 1971, the value of every major currency on earth has fallen dramatically. The US dollar alone has lost over 85% of its purchasing power. Meanwhile, asset prices, stocks, real estate, every monetary cycle reaches a breaking point. Too much debt, too much expansion, too many bubbles, then the collapse comes. But here's the dark truth. Crises are not failures of the system, they are features of it. Because during a crisis, the elite buy assets at massive discounts. Governments bail out large institutions. Central banks print more money. The middle class loses savings, businesses, and homes. Wealth concentrates even further. Think about the Great Depression, the dot-com crash. When the cycle resets, ordinary citizens face consequences they didn't create. Inflation quietly steals purchasing power. Your salary stays the same, but the cost of living rises. Debt rises faster than income. Loans become a lifelong burden. Assets become unreachable. Home ownership becomes a privilege, not a right. Wages stagnate while corporate profits soar. Retirement plans lose value. And worst of all, people blame themselves when the system is rigged against them. After every collapse, governments promise reforms. We'll regulate the banks. We'll protect the middle class. We'll control inflation. But no matter what changes on the surface, the underlying engine remains untouched. Why? Because politicians depend on borrowing. And borrowing depends on the cycle. If they ever stopped it, economies would contract, stock markets would crash, governments couldn't fund themselves, banks would collapse. So instead, the world moves deeper into the same system, with the same rules, producing the same winners. Let's look at where we stand right now. Global debt is over $315 trillion. The top 1% owns more wealth than 60% of the world combined. 70% of all US dollars were created in the last 20 years. Inflation is the highest in modern history. Housing is becoming impossible for the young. Central banks are preparing digital currencies for tighter control. The covert monetary cycle has reached its most powerful stage. And the next reset is approaching.